I think one of the things that's maybe interesting about the payment space is that there's a lot of what I consider like frenemies, where, we're all kind of competing, but we're partnering and we're working together. And there is a lot of camaraderie and there's a lot of, hey, how can I help you succeed, and just working together to make the space that much better.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hi, everyone. Thank you for joining Wrestling Payments. I'm here today with Caleb Avery from Tild. We're going to get to Tild during this discussion, but I think we have a lot of kind of a story to tell before we get there. Caleb, would you like to introduce yourself?
Yeah, absolutely. Thanks for having me on the show today. I'm Caleb Avery, the founder, CEO here at Tild, but I started my career in the payment space at 19 years old, going door to door, selling payment processing services to small business owners. And so the payments ecosystem is really the only world that I've ever known. But for me, started out in that door-to-door sales model, going out, working with small business owners to help them with their payment solutions. And, over time scaled up that first business. And really between that first company and Tild, I started doing a lot of angel investing and consulting, with vertical software businesses. And so over my career, I've gotten to see various different parts, of the payments landscape, starting out with that direct to merchant, side of the business. And then over time, starting to work with a lot of vertical software platforms, doing all sorts of, verticals, from dental software practices to camp platforms to government softwares. And for a lot of those companies, they were working with folks like Stripe and Braintree, just passing along, the payment fees onto their merchants. And they started coming to me to figure out how they could generate revenue off of all of these payments that were flowing through their platform. It was really through those experiences that I got the idea, for what became Tild, which I'm sure we'll talk about, at some point on the show.
Yeah, I sort of want to pause you along the way. I know the folks who are listening can imagine we have an initial meeting, we talk about stuff, but I want you to touch on what you just said again. And if I'm going to feed it back to you and tell me where I may be wrong, and then can you just explore it a little bit more? In the case that you were talking about, the fees that the processors, the credit card processors charge, it was really becoming a pass-through for the companies you were working with. And you said, whoa, it doesn't have to be a pass-through. Can you explain a little bit in case someone listening doesn't get it?
So let's take a specific example of, a dental software company that's servicing dentists. And if that dental software company is partnered with a company like Stripe, oftentimes they're taking the 2.9% and 30 cents that Stripe is charging, to that software company, and they're just passing along, those fees to the underlying dentist on the platform. But the reality is it does not actually cost 2.9% and 30 cents, to process payments, which is hopefully not a secret, to the listeners, here today. And for me, I was getting approached by either the investors, the management team, sometimes the fractional CFOs, for these software businesses that were saying, hey, we've got, $200 million in payments flowing through this software company, and we make $0 in revenue on $200 million, flowing through the system. Like, is there a way for us to monetize these payments? And, we're talking about a world 8-9 years ago, before the idea of monetizing payments was mainstream, before PayFac as a service, even existed. And so a lot of these guys were really, on the cutting edge of software companies, even starting to think about how they could generate, revenue on their payments. Whereas, fast forward, here 9 years later, very popular topic. There's a lot of options. There's a lot of different ways, to go about it. And I think it's a very well-established principle where you've got mainstream examples like Shopify and Toast that have made arguably more money on payments than they even do, on their core software solutions. And so I was being brought in as a consultant, for these businesses to help them figure out what's the strategy. What do we need to switch out from a technology perspective? Who do we partner with? What's a fair deal? How do we negotiate these contracts? How do we price our merchants? How do we take this to market? There's so many considerations that they had to go through that they were bringing, me in to help them think through, soup to nuts. What's the strategy and how do we go about it?
Excellent. And you've mentioned it a couple of times, and it was really in when we got introduced to each other. Can you talk about a little bit about PayFac and, as a term, who's familiar with that? I wasn't familiar with that originally. Can you talk a little bit about that?
Yeah, sure. So, I'll probably use a lot of acronyms today. I try to do my best, not to, but I think the reality is, industry jargon's almost unavoidable at times. But the term PayFac is short for payment facilitator. And when I think about the PayFac model and how that differs from the traditional, agent ISO model, one of the big differences comes down to the card brand rules and regulations. So, Visa, MasterCard, Discover, Amex, band together and create a lot of the rules and regulations for that underwriting process that has to take place for a small business owner to be able to accept credit card payments at their business. In that traditional agent ISO model, each small business is getting their own merchant ID, their own merchant account, and they're having to go through a very thorough vetting process to get that account created. So you're still seeing like the bank's logo printed on the application. And there's a lot of rules that in this day and age don't make as much sense as they did, 10, 20, years ago. Whereas the PayFac model, which folks like Stripe, Square, Braintree, PayPal have really made quite famous, is predicated on the idea that the payment facilitator is going through this very extensive vetting process with the banks, the acquirers, the card brands to get registered as what's considered a master merchant. And so that master merchant, sub-merchant concept is really one of the hallmarks of the payment facilitator model. And what that means is that the payment facilitator, once they've gone through that registration process, they can create a much more streamlined onboarding experience. They can do a lot more complex flow of funds. So there's a lot of advantages to that payment facilitator model. It's one of the reasons why, Stripe and some of these big companies have been able to scale, as quickly as they have. And so, on the one hand, tons of advantages to the payment facilitator model, but the downside was always the process to go become a PayFac. And so traditionally, that was like a 2-year multi-million-dollar process. And so you can imagine for the average, vertical software business, they and their investors do not want them to spend, years and millions of dollars on something that's not core to their business. And that kind of essence of the difficulty around the PayFac model is part of what inspired me to pursue PayFac as a service.
It's really interesting. Now, part of this podcast is about talking about cool and, innovative payment approaches. The other part is talking about skill sets and development, career development. Can we jump back again? How did you find yourself going door to door? And to make it simple, what were the key skills you needed that actually moved you, and if I understand this correct, from entrepreneur, worker, hustle, to a VC back into an entrepreneur mode? Really fascinated because I think there's a whole population out there that says, I can do that. And giving them the skills would be really key.
Yeah. So a couple different questions baked in there. I think thing one, like, why did I get started, going door to door in payments, which is probably not what every 19-year-old college student is doing, is probably my guess. For me, my partner in that first business, his stepdad had a lot of experience in the payments industry and in a different, vertical. And for us, that was between sophomore and, junior year of college for me. And we're, essentially two broke college students trying to figure out what can we do to get involved within the payments industry. And the reality of, starting an ISO is pretty easy. That's why there's thousands of ISOs, out there, set up an LLC, buy a tie, and you're ready to get out there and start talking to merchants. And so for us, it didn't start out with this grand plan of, hey, we're going to go build this multi-billion-dollar business. That was never, what it was about. It was just two college students going out door to door, trying to help small business owners, with their payment needs. And for me, when I look at, the skills required to do that and kind of how that's helped me, throughout my career. I think, practically speaking, door-to-door sales is not the easiest gig. And I think a lot of
Nope.
people aren't even willing to try it. And part of it comes down to the rejection that you are inevitably facing. So, I'm going out and talking to 20, 25 business owners, a day, and I'm hoping to have one or two good conversations and hope that I don't have, 20 doors slammed in my face. And so, I think thing one was just getting comfortable with the idea of rejection. And that's something that, has served me very well being now a fintech, founder, where there's rejection on a daily basis, customers, potential employees, certainly in the investment process, trying to go out and raise funding. I mean, it's a slog out there, and there's a lot of rejection. And so I think, that was certainly, one thing that I picked up. I think thing two is just learning how to sell. And so, payments, especially door-to-door payments, is a very, very competitive arena, and trying to convince small business owners to trust, me at the time as a 19-year-old, with the core part of the business. The payment processing is how they get paid. That's how, they make their money. And for a lot of these guys, that's 90% of the income, that they're making. And so learning how to, sell, how to explain, the value prop, but also how to build trust, with the folks, that you're selling to, and build that relationship, with your merchants. I think all of those skills are something that, certainly took time. Wasn't amazing at it, at 19, kind of first swing, of the bat, but over time, got more comfortable and developed those skills. And all of that has certainly served me well, both in the angel investing and consulting that I was doing. And then certainly, in my role, as founder CEO here at Tild.
Mm-hmm. And I imagine, and correct me if I'm wrong, I think it is my imagination, somewhere behind that lit up Tild sign, is there a room full of coders? Did you have to learn code, or was it more business skills?
Yeah, so I am certainly not the technology wizard behind the scenes, as it were, but we certainly have an incredible team, both product and, product folks and engineers that have built out the product here at Till. And so for me, it was less about learning to code and more finding the right people. Mm-hmm. So for me, in the early days, one of the big pieces of the puzzle was really thinking through, like, what did I actually want to do? And what was I good at? And then what are all of those things that I'm not good at or I don't want to do in the business? And then making sure that I'm hiring, the right folks around me to help fill those gaps. And certainly the technology side was a huge part of that gap. I think for me, one of the skill sets that I really had to work hard to develop was my product management skills. And so when you think about us as a technology, business, deciding what to build, what order to build, what features, to prioritize, how to design, the systems, those are all very complex, very nuanced decisions. And sometimes you're getting good feedback from customers, but a lot of times you're trusting your gut, your intuition, and your experience. And that was something that I did not have experience with, prior to Till, but honestly has been one of my favorite parts, about building the business, has just been getting so involved in, the build out of the product and getting customer feedback and iterating, to get ourselves to that point of product market fit, with the solution that we built out.
So in your career with Tild, you work with banks?
So at Tild, we've got a variety of different types of folks that we partner with. So certainly we've got, a network of different sponsor banks that we work with, to help facilitate our business. We've got acquirers or processors, depending on how you think about, the universe that we partner with. We've got the ISVs or vertical software companies that we partner with. And then we also have quite a lot of agents, ISOs, and payments consultants, that we partner with as well. And so I think one of the things that's, I say unique, but maybe interesting about the payment space is that there's a lot of what I consider like frenemies, where, we're all kind of competing, but we're partnering and we're working together. And, I think it's been really, interesting and exciting for me to build up my network, over the last 5-6 years, building out Tild and really understand that a lot of us, even though we are kind of competing against each other, there is a lot of camaraderie, and there's a lot of, hey, how can I help, you succeed, and just working together to make the space, that much better.
And so I'm building up to a different question, but just a little bit more. You mentioned an acronym, and it's really funny if you listen. I'm always afraid that we're using acronyms too much, and I'll go listen to a podcast about manufacturing. They use just as many acronyms. Everyone uses their own acronyms, but one of the ones you mentioned, and I until I learned more about card payments, I didn't know what it was. Can you talk about an ISO?
Sure. Yeah, I think that's probably the one acronym that I'm the most guilty of using and not, explaining. That's essentially, the world that I've operated in, my whole career. So for me, it's like, oh yeah, of course I know what an ISO is, but not everybody went door to door selling payments at 19. So an ISO is an independent sales organization. And when you think about the history of the distribution model in payments for a lot of both the banks and the processors, they used independent agents and then these independent sales organizations as their boots on the ground or their feet on the street to actually sell their products and services to small business owners. And so historically, ISOs and agents have been the majority of the way that payments have been distributed, at least here in the US.
And here's the question I was trying to build up to. So I want to talk a little bit about your time after door to door, but slightly before Tilled. And I imagine you were working with other founders with VC stuff. And it was very clear in your intro that you knew the underwriting part, the compliance part, the rules that needed to be followed. When you were working with folks that maybe weren't in banking, they know they had a part of their fintech innovation that was about a payment, but they may not have known the laws, the regs, the rules, the things that a bank or an acquirer or an issuer needed to be done, dot the I's, cross the T's. How would you explain to them or introduce them to, in a world where I could go in the back room, do a couple of keys and fix my, if you said it wasn't doing this and I could fix it like that, how do you explain compliance and regulation and the heavy risk management that the other side of the equation's under? Have you run into that situation?
Absolutely. I think for me and a lot of the consulting engagements that I was doing, whether it's the CEO or the CFO or the COO, they were coming to me saying, hey, we've got, this perceived problem. We've got all of this volume, hundreds of millions of dollars, one of them over $1 billion in volume flowing through their platform. But we're not making very much money on these payments flowing through the platform. And for some of them, they had kind of a preconceived idea of, hey, well, if we just go become the registered PayFac, then all of a sudden we're going to unlock this incredible revenue stream and it's going to be amazing. And you can sit there and, try to scare them with, oh, there's all this liability. But I never really found that to be, the most effective. I think for me, at least with the CEOs and the CFOs, just putting it on paper. Here's what, the actual dollars and cents, this is likely to look like with the PCI compliance costs, the salaries, the tools that you're going to need, the potential, liability losses. And it's like, okay, well, here's the revenue, but here's all the costs that you're looking at, if you actually go become a registered PayFac at, 200 million a year, in volume. And when you put it down on paper and you're like, okay, well, the path that you're recommending looks like this. Sure, there's a lot of top line revenue, but the costs actually end up eating essentially all of the revenue. Or here's door number two. Door number two, you make not quite as much top line revenue, but there's essentially no cost that you're adding in, in terms of overhead and liabilities. And for a lot of these guys that had that like same kind of financial mindset that at least I have, that just makes sense. And you don't even really have to get into, well, here's how underwriting works and here's how, chargebacks and liability and all this stuff works. It's like, this is the dollars and cents, of this. And oftentimes that was enough to kind of convince them that maybe that's not the path that makes the most sense for your business.
Excellent. That's, I mean, you saved them without even knowing that they were walking in for you to save them. That's really cool. So let me dip into our podcast name for a minute. Wrestling Payments. It sounds like you've wrestled with a lot. Were you ever a fan of wrestling? It's sort of tongue in cheek that we do wrestling, but
yeah, no, love the name of the podcast. For me personally, I can't say I was like the world's biggest fan of professional wrestling, but definitely watched, my fair share of WWE growing up. And I think for me, the character that always kind of resonated with me was The Undertaker. I feel like he took a bit of a different approach than a lot of the other professional wrestlers, where a lot of them, did the talking with their mouth. He was definitely not the guy to come out there and say very much. He let kind of his persona and the mystique and then, his skills, do the talking for him.
Excellent. Yeah, he's actually our little mascot here. So.
Oh, did not know that. Well, there you go.
Yep. That's interesting. That's sort of the planned podcast, but what lessons, if like, for example, if you were a teenager today in college, what would it be the same track you followed? Has the world changed since then?
Yeah, I feel like, when I first started in the payment space, people were already predicting the death of the ISO. And those talks have kind of ebbed and flowed, over the last, decade plus. And I think at this point, when I reflect on the idea of the death of the ISO, if I was, 19 and doing this all over again, I definitely think that there's still a lot of opportunity in the payment space, but I think it looks very different than it did when I was getting started. And I think the biggest trend that's reshaping the payments industry is the rise of software-led payments, or these vertical software platforms. So, if you roll the clock back, to when I was getting started, it wasn't actually all that common when you're going door to door that you're running into a merchant using any sort of specific, verticalized software system. They were either using, for the most part, standalone terminals, and the payment system was not connected to whatever business software that they were using, or they were using, some sort of horizontal, system that oftentimes was leveraging, gateways where you could plug in any processor you wanted. And so the idea of these kind of closed payment ecosystems or verticalized software didn't really exist. Whereas nowadays, if you're an agent going door to door selling payments, you're probably running into, 1 out of 4 merchants, maybe even more, depending on kind of what verticals or what area you're in, that are leveraging a vertical software system that probably has a closed payment ecosystem. And so the potential pool of merchants that you're able to target is shrinking pretty dramatically, week over week, month over month, year after year. And so for me, if I was doing this all over again, I think I would certainly be paying more attention to the software, side of payments, and, maybe partner with, a verticalized software and say, hey, I'm only going to go sell to car dealers or dentists, or like pick a couple of verticals and go sell payments plus software to those folks, which, really when I was going door to door, maybe some people were doing it, but it certainly wasn't the mainstream opportunity that I think, exists much more heavily today.
Mm-hmm. Mm-hmm. So we here at NEACH, we're a payment association. We grew up as ACH folks. We happened to visit, and he said, hey, let's check it out. In New England, there's the Northeast Acquirers Association.
Yeah.
And we walked into their exhibit hall, and it was elbow to elbow, vendor to vendor. There had to be over 100 vendors offering all sorts of flavors of this and this. And if you do your processing with us, we'll do your website. I'm like, do your website? And we'll do your social media. It was, ACH is pretty, I don't want to say this and don't quote me, but ACH is pretty boring. It's, ACH, ODFI, the originator, the RDFI. This place was wild. There was so much activity. So, and lots of ISOs, lots of other I's. There's other I's as well in there, right? Independent is it marketing or V? There's a V in there too.
So yeah, I mean, there's ISOs, ISVs is probably one of the terms that I hear and say, all the time with independent software vendors, that typically are selling some combination of, verticalized software plus payments plus maybe payroll or insurance or lending.
Interesting. Super interesting. So it's an exciting field. I imagine you're busy every day. I didn't ask where is Tilt located?
Yeah, it's an interesting question in the kind of distributed, world these days.
Right.
So I personally am in the podcast studio here in Boulder, Colorado, and we've probably got, I don't know, 20+% of our employee base here in the Colorado area, but really we're distributed all around the US. I think for me, while we started about 5 years ago, we really got going during COVID. So I think, when COVID started, we were 3 or 4, employees on the team. And so we've grown basically the entire team during the COVID, era. And so we started, just hiring, hey, where are the best people that we can hire for any given role? And that's how we built out the team.
Excellent. As a side note, meeting Megan and having her help coordinate us, she was fantastic. So I appreciate her. Is there anything we haven't covered? Because, I kind of want to do a revisit with you to see how things are going in the future. Because it's really, this was all fascinating to me. But is there anything we didn't touch on that you'd like the audience to know?
Yeah, I mean, I think one of the angles that I am starting to see, within the payment space, if you look at, I feel like we talked a lot about kind of where the industry was, kind of where we are today, and then if you think about where we're going, in the future, I think what I am seeing is that we're starting to see a lot of the, I say legacy, and I don't mean that, in that derogatory of a fashion, but a lot of the legacy players that have been around for decades are starting to realize both the threat and the opportunity that exists within this software-led payments ecosystem. And so if I think back to, when we started building out Tild, 5 years ago, a lot of the traditional acquirers weren't paying nearly as much attention to this ISV vertical software, landscape as they are today. And I think that in part is because of what we talked about earlier in terms of that rise of the vertical software and the idea that the agent ISO model is becoming much more competitive as these companies spring up. And so what I'm seeing is that a lot of the banks, the acquirers, the super ISOs, the processors are reaching out to folks like myself, trying to understand, like, is there an angle for them to partner or white label or refer these types of, ISVs or vertical software companies, to Till. And I think we've seen a pretty dramatic acceleration, of that trend over even just the last 6 months,
Wow.
where I feel like a lot of these guys are starting to realize, like, we have to be competitive in this side of the business if we're going to continue, the growth rates that they need to as, publicly traded businesses. And so I think it'll be really interesting over the next couple of years to see, how that trend continues to evolve, whether these guys are building, whether they're buying, whether they're partnering, kind of what approach, a lot of these guys take. Cause I think there's really no question in my mind that you're going to see, really all of the traditional acquirers start to get more active in this ecosystem. It'll be interesting to see how that plays out.
Well, that's excellent. Can we actually schedule something for 6 months from now? I really would like to check in and see what's up. So I will stay in touch. I'll reach out to Megan, try to grab some of your time. But I appreciate you being here today. Thanks again. Thanks for joining us on Wrestling Payments.
Awesome. Thanks so much for having me on the show today. Really appreciate it.
Thanks, Caleb.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.